If buying a house on 2025 is on your to-do list, stop what you're doing right now. These 3 tips will save you a lot of time and money. I remember my first home buying experience. Honestly, it was a little overwhelming and I didn't really know what I was doing. If this is where you're at, don't worry, I've been there and I will have your back. So let's get into these 3 tips. Number 1, work on your credit score. You'll need at least a 620 credit score or above to qualify for a mortgage typically. Now, the way it goes, the better the credit score, the better the interest rate or the deal that you may get on the home, and you'll look more credible when you're making an offer on a home. So if buying a home is on your list for 2025, make sure you're paying down your credit card balances, not missing any payments, and keeping your credit utilization low. 2, minimize monthly debt. When it comes to your affordability, mortgage lenders look at your debt to income ratios. These are things like monthly credit card payments, auto loans, or student loans, anything that you're making a monthly payment towards. The less debt that you have, the better chances and the more that you should get approved for. Number 3, don't forget closing costs. You'll hear a lot of talk about down payment, which typically starts anywhere from 0 to 3.5%. But what people don't really talk about are the closing costs on a home. These are costs that are setting up your escrow account or paying title or escrow or the lender in order to close on your home. You hear a lot about down payments, which are anywhere from 3 to 5% depending on the loan program. But what you don't hear a lot about are the closing costs it takes to close on a home. This can range from another 3 to 6%. So for example, on a $300,000 house, it could be up to another $18,000 just to close on the home if you can't get it negotiated. If you've got questions, send them my way because I want to know what you want to know. And if you want more straightforward home buying tips, follow me.